Yeah, welcome back. So once again, welcome back, friends. A big start, a certified financial planner and educoach with PWA and education wing of Paytm Money. हमारे हर एपिसोड का जो जिस तरह से हम पेश करते हैं वो सेम तरीका रहेगा. इट्स एब्सोल्युटली सेम. वी हैव दिस प्लेटफॉर्म जिससे आप पहले से ही जानते हैं. दिस इज एपिसोड नंबर 19 एंड this is a platform where we invite experts from the financial field, financial experts जो अपने एक्सपीरियंस और एक्सपर्टीज को हम सबके साथ शेयर करेंगे. Yeah, so this is where it comes in, and not just experts from the field, but we will be also inviting experts from the social media. People who are well known for their contribution in social media, यानी इतने famous है कि आप उन्हें follow करते हैं. So these are people from the public domain who are known for their contribution. तो हमारा जो format है वो same ही है. जैसे हम पहले से करते आ रहे हैं वैसे ही हम करेंगे. मगर आज जो हम चर्चा करेंगे एक बहुत ही बढ़िया टॉपिक पर है, एंड दैट इज कैचिंग इंडिया ग्रोथ स्टोरी द म्यूचुअल फंड वे. And for this, I would like to invite Kunwar Singh today and Chintan Haria. These are our two guests which we have invited to give you some knowledge so that you could take financial understanding, and on your investing journey they'll definitely be very helpful for you. But before we start, I'd like to tell you that this talk is powered by Paytm Money. Um, so, can we have Kunwar on board? Hi, Kunwar. Good evening.
Hi Shivani, how are you? I'm good. Thank you, thank you. Thank you for having me
It's
here.
a great, it's absolutely a great pleasure, to have you on board. I'm a great fan of yours. I've seen your videos on YouTube and LinkedIn, and I was, going through your profile. I'm very, very impressed, must say. That's why you have such a huge fan following, right? More than 8 lakh kind of people following you. So, friends, he is not just a financial guru, but he has done a lot of things. So, Kavar, would you be, would you tell our friends here, all our viewers, your introduction, please, a bit? कि आपने
Sure,
आपकी लाइफ जर्नी कैसे स्टार्ट की और अब तक आपकी जर्नी कैसे रही है.
for sure. So basically, my name is Kunwar Raj. I'm one of the founders at Unfinance, and हम बहुत सारा content create करते हैं on personal finance and investing. But at heart, I'm an entrepreneur. So I started my first company when I was 22, and it was called Invoid. We were working with a lot of fintechs and automating KYC for them. So that's where I got very interested in solving scalable problems and interacting with a lot of customers. And I saw that most people in our country are very scared of personal finance and finance management. They get overwhelmed when they think about consuming content or buying any financial product. And that's how in 2020 I thought कि Instagram पे एक पेज स्टार्ट करते हैं. तो हमने वॉरेन बफे के बर्थडे पे we started creating posts on personal finance, and it caught on very quickly because our main aim was to simplify content ताकि हम जैसे लोग young लोग समझ सके finance को और उससे डरे ना. That's how we started, and we create content every day now. We have our own mobile app. We create content on YouTube, Instagram, हर जगह.
Yeah.
So the idea is to अगर हम 1% भी इंडिया का financial literacy improve कर सकते हैं, my job is done. So yeah,
Yeah, I
that's
saw your mission statement. Basically, you want to touch 500 million lives, especially Indians. So that they could empower themselves to take mindful decisions. You and me, we are on the same page here because that's the reason I shifted my career from medicine and I came into finance basically. So I also love to talk to people and to help them with their financial wise. So that's a wonderful thing, Kuwar. So. What is your take on mutual funds? You know, mutual fund, is it one of the ways in which investors could actually move ahead?
I mean, for sure. I think mutual funds is very important for any beginner or normal investor who wants to, get a diversified exposure to the market. But it's very important to understand and know what kind of mutual fund you're owning, because there's a lot of mutual funds and sometimes बहुत overwhelming हो जाते हैं वो भी. So my take is कि बहुत लोग म्यूचुअल फंड्स के स्टॉक होल्डिंग्स या सेक्टर होल्डिंग्स या थीम्स नहीं देखते बिफोर
हाँ,
इन्वेस्टिंग. सो बेसिकली
हाँ,
हर एक एएमसी का बहुत सारे म्यूचुअल फंड्स होते हैं, राइट? एंड द
correct.
वन यू बिलीव इन या फिर जिसपे आपको भरोसा या फिर आपने स्टडी करी है, यू शुड गेट इनटू दैट. उसके बाद इट्स मच लेस वर्क दैन sort of identifying single stocks and then investing in it. So even when you're investing in mutual funds, आपको पता होना चाहिए किस थीम या किस सेक्टर को या किस आइडियोलॉजी से उसका फंड मैनेजर और वो फंड आगे बढ़ रहा है. So
I
that's like my
agree.
basic take on mutual funds. Yeah.
I agree, because what has happened is, with the Amphi slogan, mutual fund sahi hai. We are seeing a surge in the investor portfolios nowadays. Plus, with
Correct.
COVID coming up, the pandemic happening, what has happened is people are scared कि कल कुछ हो जाए तो family के लिए कुछ हो. So they're looking at higher investment rates also for themselves, and a little bit
Hmm.
more of savings for their families. So the recent data also shows that the mutual fund investments have increased in these
Hmm.
last couple of years. So it's important, especially with Amphi giving out mutual funds sahi hai. So this what you said, I really agree with you, because people need to select their funds wisely. They need to know how to invest and go about it. So this is basically a confusion in the young mind, or even investors who are like
Hmm.
me, who are already there. For n number of years we have been investing. With so much of happening around, global chaos is there, interest rates are
Hmm.
rising, right?
Hmm.
Inflation is moving up. So what is your take on the market? Basically markets are pretty volatile, aren't they? Sometimes it's going up, sometimes it's a bull run, a bear run. So आपका take है, what would you advise our viewers कि in the short to medium term आपके हिसाब से market कहाँ, because you have a lot of followers, actually, तो उनके लिए आपका क्या कहना है?
I mean, obviously, I can't say what the market will do tomorrow or in the short term, but my take is very simple कि last, I don't know, 100 years में 53 years ऐसे रहे हैं जिसमें मार्केट गिरी है. ठीक है, 10% से ज़्यादा गिरी है. और 10 या 15 साल ऐसे रहे हैं जिसमें 25% से ज़्यादा गिरी है मार्केट. सो वी नीड
हाँ,
टू एम्ब्रेस वॉलेटिलिटी. मतलब मैक्रो इकोनॉमिक कंडीशंस विल कीप चेंजिंग. इन्फ्लेशन पास्ट में भी बढ़ा है, oil prices past में भी बढ़े हैं. So it will keep impacting the market. So if I am in the market investing via stocks or mutual funds, I have to come to terms with the fact कि market गिरेगी. नहीं गिरेगी तो there's no opportunity that I can sort of have to invest and buy good mutual funds or good stocks at a certain discounted value जिसपे मेरे पास growth का scope होगा. So that is
हाँ,
what most people are kind of not okay with. And what I've seen is कि बहुत लोगों ने अपनी investing journey कोविड के बाद start करी है. कोविड में जो
true,
dip आया उसके बाद continuously it's been increasing. So a lot of people,
हाँ,
young people, which are majorly our community members, haven't seen such volatility और जो इस वक्त चल रहे हैं, तो वो इसलिए पैनिक सेलिंग या पैनिक क्रिएट हो जाता है. बट मैं सबको यही कह रहा हूँ कि आप हिस्ट्री देखो, अगर मार्केट गिरी है 50 साल तो आगे भी गिरेगी. बट ओवरऑल ट्रेंड जो रहा है लास्ट 100 years में, मार्केट बढ़ी है. सो वी नीड टू sort of get over this idea, like माइंड ब्लॉक की मार्केट क्यों गिर रही है. मतलब वो
correct,
गिरेगी.
correct.
एंड मैक्रो इकोनॉमिक कंडीशंस विल कीप चेंजिंग. सो या.
True, true, true. That's exactly what I was saying, because the trend of the market has always been upwards. In the long run, if you take history of the US markets or the Sensex, आप last 49 years का जब से market बना है, तब से आप
हम्म.
देखोगे तो average return काफी comfortably 14-15% का market दे रही है. So the downfalls may look like certain very scary for a new investor, and if he
हम्म.
burns his hands there, he never going to enter the market. So, what
Correct.
would you advise, investors? Should they remain invested in the market? Should they put in a lump sum, or they should go the SIP way? एक very simple सा question है.
मेरे हिसाब से इस वक्त सबसे इम्पोर्टेंट चीज जो मतलब जो मैंने इंकलकेट करी अपने बिहेवियर में, एंड आई रियली थिंक लॉट ऑफ पीपल शुड डू इज दे शुड स्टॉप चेकिंग देयर पोर्टफोलियोज एवरी डे। वो
Perfect.
मतलब इट क्रिएट्स एन इल्यूजन कि मेरा पोर्टफोलियो खराब परफॉर्म कर रहा है जितना खराब वो कर नहीं रहा होता, एंड आई एंड अप टेकिंग like all of us end up taking rash decisions on that. So like it's like one of the pillars जो I think most famous investors have been saying कि आप हर रोज अपना portfolio देखना एक तो बंद करो, and in terms of the approach, I think when certain opportunities present कि अगर मतलब कंपनी कुछ शॉर्ट कुछ नॉट एक्चुअल रीजन है, किसी मेजर रीजन की वजह से डाउन है, या फिर कोई मैक्रो इकोनॉमिक कंडीशन है कि बहुत सारे स्टॉक्स की वैल्यू गिर गई, देन यू कैन ऑब्वियसली डू लाइक अ वन टाइम इन्वेस्टमेंट, बट इन लाइक द जनरल सेंस आई हैव अ लॉट ऑफ SIPs दैट I've created in index funds, mutual funds, and even stocks. आजकल आप stocks में भी SIP create कर सकते हो. So all
हाँ.
those things are important. So I would say, like in a general way, like SIP is the preferred route for like I would recommend to a lot of people investing these days.
In current situation also, because SIP will tide them over. Rupee cost averaging would help them, take an average price out of the market.
Yeah,
True.
yeah.
True.
But I mean, you should always have certain cash with you to sort of invest in certain scenarios as well.
Yeah, and
That's one.
cash in opportunities that come your way,
Yeah,
right? Definitely. So that's where,
liquidity.
if I think, emergency fund is also a very important part of planning your portfolio. Don't you
Emergency
agree to that?
fund is basically for like emergencies, but I'd say uske alawa you should have certain fund parked in very liquid investments, ताकि आप ऐसी सिचुएशंस में या फिर जब आपको लग रहा है कि मतलब आप इन्वेस्ट कर सकते हो इन सर्टेन स्टॉक्स और वो अच्छे रेट पे अच्छे प्राइस पे मिल रहे हैं, आप इन्वेस्ट कर पाओ, या इन
App
म्यूचुअल
investment.
फंड। करेक्ट।
Right, right. See, the topic, the theme of the day today is catching India's growth story, the mutual fund way.
या
So, we know that India is one of the fastest growing major economies in the world, and
करेक्ट।
International Monetary Fund has also given a projection of approximately, I think, 8.2% kind of a growth rate, which is fairly good enough. And it's twice that of China's and other countries, growth rate. So do you think investors can catch up? Those who have not actually invested, now is the right time, because with a recent kind of surge in the investments in mutual funds, we saw that people have not yet lost faith in investing. They are actually pooling more funds in spite of the market volatility. So do you think mutual funds would give them that kind of, those who have not invested, they can start investing now and catch up on India's growth story?
No, for sure. I mean, India is at like at the very beginning of its growth story. India का like जो $5 trillion economy बनेगा goal था by 2025. Probably that's
Hmm.
going to be delayed by a couple of years. So we have a lot of space to cover. So anyone entering the market right now or starting to invest in mutual fund or stocks right now is
Huh.
probably like one of the best times to catch that growing trend. मतलब if you it's like saying कि जब China like 10 years back, what China was, if you had invested in China, look where
Hmm.
your investment would have led you in terms of growth. The same state India वहाँ पे. So I mean, it's a no-brainer. मतलब it's like one of the best times to be in the Indian
Right.
market. I think 89 कंट्रीज से इंडिया में FDI आया है लास्ट ईयर, which is crazy. मतलब कहाँ से लोग इंडिया में इन्वेस्ट करना चाहते हैं. Everyone wants to invest in India right now. So as Indians, I think we should be the
We need.
first ones to take advantage of this sort of stage where we are at.
So there are a lot of funds, in the market, which can capture this growth. And one such fund is actually the ICICI Pro India Opportunity Fund. Um, but I think it's being thematic or sectorial in nature. How do you think this theme is going to play out in the next 5 to 10 years? We have definitely an expert coming in. Chintan would be there
Yeah.
to, help
Yeah.
us with the fund. But what is your perspective about this?
I like genuinely, very honestly, love the theme of the fund, and personally, also, I would definitely go for it because, uh, I mean, the fund is focused, right? It's not extremely diversified. It is
Hmm.
investing in good, solid companies at
Hmm.
stages or at points जहाँ पे कुछ opportunity है. For let's say corporate restructuring हो रहा है, या फिर I mean obviously Chintan will explain better, या फिर कुछ macro economic condition है, industry condition है जिससे वो stock temporarily गिर गया है. And I think
Huh.
that's like one of the best strategies to invest in stocks, getting them at bargains, right? That's how Warren Buffett, Peter Lynch, all of these famous investors have played out their investment strategies. And for someone like for a lot of us who don't have as much time to research or invest in individual stocks, I think investing in this theme is going to is a good thing to do for anyone who wants to catch on India's growth story, at the same time accumulate good stocks in a very focused manner.
Discount price. Yeah, yeah.
Correct,
Perfect, perfect.
correct.
Uh, Great. So I think let's invite Chintan Haria from ICICI Pru to join us at this moment here. Chintan, can we have you on board, please? Chintan is actually
Good
head
evening.
product development and strategy. Hi, Chintan at
Hi,
ICICI
good evening.
Pru. Yeah. How are you, Chintan?
All well, ma'am. Good to see you. Hi, Kumar.
Good to see you
Hi,
too.
hi.
Chintan, it's actually my pleasure, to be in sharing a stage with you and cover. It's really a great pleasure to be on the same stage. You both are very strong players in this industry. Chintan, I would like to introduce you to the audience. You are actually joined ICICI somewhere around, I think, 2005, and you have really, as a management trainee, I read your profile. It's really a wonderful journey. Could you share your journey so far with the viewers, please?
Yes, I'm sure there are many new viewers, but the older viewers will find it a third time repetition or a fourth time repetition. But nevertheless, I will for the benefit
Yeah.
of everyone. I think after my chartered accountancy, I honestly, at that point of time, there was not much knowledge about mutual funds. I just happened to get a call from ICICI Prudential Mutual Fund, which at that time was called Prudential ICICI Mutual Fund, and was lucky enough to get a break there. And I think I had seniors who guided me throughout, and the journey has been pretty good. I started on the dealing desk, then I became analyst for oil and gas. I used to run active funds, then as head of products and strategy in the last 6 years, have been responsible for driving new business initiatives across our mutual fund platform on equity and debt, our alternate space, that is PMS and AIF, our passive space, that is ETF and index funds. So it's been a journey where in the last 6 years, I would say a lot of new concepts, a lot of new thoughts have been launched with the guidance of our superiors and our CIO. And I think we have been able to bring the entire product suite under one roof to investors. So when people say, okay, you need to diversify, we say that we have everything under one roof for you to diversify and ultimately create wealth for yourself across the spectrum of investments that are possible within the mutual fund space. Thank you.
Um, Actually, Chintan, with respect to today's topic, catching up India's growth story, the mutual fund way, I was just speaking to cover, regarding the fund which is there available with ICICI India Opportunity Fund. We would like you to, talk to the viewers, explain them some pros and cons. If you have some PPT, if you would like to share, and, give them a more better insight into taking
Sure.
informed decisions.
Sure. So about 3 to 4 years back, when we launched the ICICI Prudential India Opportunities Fund, uh, India lacked a special situation oriented fund which basically would take advantage of temporary disruptions in stocks. We've seen enough number of instances in the last 3 years, and this fund has been able to participate in many of those. And I can give some examples. For example, metals as a sector, right? Almost 10 years, metals did not perform between 2008-9 to 2020, and when COVID
Ah,
struck and there was, large spread liquidity infusion by global central banks, we knew that this was the time where commodities could go up. And that special situation moved us to buying into commodities in this fund. And because this fund, like Kaur mentioned, it takes concentrated bets, it's not a very diversified portfolio. It got the benefit of getting the commodity call right. So be it energy, be it metals, we were able to get the call right. There were certain other, for example, telecom. India Telecom went through a very bad patch, After till 2008, Indian telecom companies were actually debt free, did very well. But then the spectrum pricing, the auctions, uh, etc., made them, debt was very high in telecom companies. From about 40 telecom companies, we came down to two or three telecom companies. Now, uh, basically, when you have that consolidation happening, the incumbent or the person who survives can actually do well, and that's where we built a very good position in telecom, and that probably did very well for us. So I think the core of this fund, as the examples which I've given, be it in metals or telecom, is that there are always in India, and we are blessed that we have so many sectors, so many diverse sectors which have so many good companies to invest in. And many of these go through temporary downturns, and the important word is temporary. If it's a permanent downturn, then obviously there is no way in which you're going to make money out of it. But the skill is, and like Kaur mentioned, uh, is the downturn temporary? Is it because of a government regulation change which is causing a temporary downturn? Is it because
Right.
of a international market or a macroeconomic change which has caused a temporary downturn in a stock? Is it because of competition that there is a change? In fact, is it because internal management or there is some problem with the promoters that has caused the temporary downturn in a fantastic company? And we've seen that happen a lot in many companies. When any of
Mhm.
one of these happens, it is the fund manager's responsibility to identify whether it is temporary or permanent. And the moment you identify that it is temporary, and in general, when there is a problem, the stocks become very cheap, you end up getting a very good entry point into a particular stock which is going through temporary downturn, and you get the upside of it when that temporary downturn goes away. Now, obviously, you don't know whether it takes 6 months, 1 year, 1.5 year, but when that downturn goes away, you make money, and then you keep moving to another stock which has a temporary downturn. So, I think it's a very unique proposition, and for all the investors who would generally have their overall asset allocation into flexi cap funds or into sectoral funds, we believe that along with
Mhm.
flexi cap funds, this is one allocation of 10 to 15% that you can have in your portfolio for getting that exposure to a non-benchmark, non-index hugging strategy. And in India,
Right.
as much as I know, this is the only strategy which is taking advantage of special situations and temporary downturns, which can help you basically participate in the long run in good companies. I would say generally it is large capish. It can take into mid and small cap, but a concentrated bet in temporary downturn companies, which can help you in the long run make money, and hence you can allocate to this particular strategy for the long run. Thank you.
True.
So that was. Are you going to take us through the presentation, or
Sure.
you
I
want?
will take the whatever I've mentioned is part of this PPT. So I'll take about 3 to 4 minutes
Oh, sure,
to
sure.
run the audience through it. So what are the challenges that any company faces, right? It is competition. You suddenly have a new competitor who would price their products at a much cheaper price point, irrespective of profitability, and we've seen that happen in telecom companies, right? Which then at that point of time causes pain to the incumbent, that is the company which is existing, gets pained because there's someone else who is selling it cheap, but that someone who is selling it cheap may not be able to sustain and eventually get out of business, which is when the incumbent or the company which is existing and has a longer track record ends up getting the beneficiary, and we've seen that happen in telecom, right? Second is, of course, board and management conflicts. I think we saw one of the largest groups in India have that, and if you're able to capitalize on that at that point of time because stocks become cheap, you will end up getting benefit. Lawsuits, government policies, you suddenly have a export ban in a particular commodity, and that company is making a lot of money because of exports. Obviously that company will get temporarily hit. Normally export bans do not last for a very long period of time. It is temporary anomalies on which you can see export bans happen. We've seen currently wheat export ban happening, so that is temporary. It may not permanently be there. Cotton prices have gone up, so we don't know if cotton prices can suddenly cause a export ban, the talks of which are happening. So these changes can impact stocks temporarily, but a good stock temporary downturn is what you can basically capture, and this is what it is reflecting. The next slide, please. Like I mentioned, any problem can have a good outcome or a bad outcome. It's the good outcome which basically we are looking at, wherein after a temporary downturn, if the company sets to benefit, you end up making money. Next slide, please. This, like I said, any company can face special situations because of government action or regulatory changes, global uncertainties. We've seen COVID, which when we 4 years back, when we launched this fund, obviously we did not know that there was a concept called as pandemic. And since it happened last in 1918, where I think it was 4 generations before us, none of us knew what a pandemic was. Now at least we know what a pandemic can do. So it can be a global event or an uncertainty. 9/11 is one sad event. You could have a COVID kind of an event. And at that point of time, you take advantage of that. In COVID, I think everything became a special situation, but more so, those industries which had to go for a lockdown was in bigger pain. Next slide, please. Yeah, so currently, of course, we are going through macro challenges like high crude prices and um, rising inflation, supply chain bottlenecks causing significant price rises in many of the commodities, which may be a temporary phenomena, which brings down. If you look at the entire FMCG space, the entire FMCG space today is basically feeling the pain of higher input costs. You look at, for example, Indonesia has banned the export of palm oil, and India used to import a lot of palm oil from Indonesia. And any company which is selling palm oil in India, processed palm oil, ends up getting hurt when it comes to the imports from Indonesia and selling, because obviously palm oil prices have gone up. So your product prices go up, which is obviously then not we are not able to pass it on immediately to the customer. So it is a temporary downturn where eventually either the palm oil prices will come down or you will be able to increase prices as a company, which will normalize your profitability and eventually lead to a uptick in your stock price. Next, please. Yeah, this I've already spoken about. We can move to the next. I've already spoken about the telecom part of it. Uh, Ultimately, it is all about probabilities. It is about uncertainties. If I tell you that I know everything which is happening right now, then probably the market will also know everything which is happening right now, which will be factored into the price of the stock. And there will not be any reason for you to make abnormal return or supernormal return in a particular stock. It is when you take the call, or it is when you take the buying decision when there is uncertainty, right? Then you will end up basically making more money, and that is where you will have to take a certain level of risk to end up basically making money. So it's not like all special situation trades will end up in your favor. So there is volatility which is likely to happen. But out of 10 stocks or 10 decisions that you take, if 7 or 8 go in your favor, I think that's a brilliant strike rate, because not all decisions are in your control. In fact, when the geopolitical tension started in last week of February, if I'm not mistaken, we all felt that by mid-March it will get over, because 10 to 15 days, normally if a war breaks out, it settles down. But we're already into the third month of the war or fourth month of the war, and it doesn't look like it's settling that easily. So we can go wrong in terms of our thought process, but if the price point is right in terms of entering the stock, if the valuations are right, and if the stock or the company is strong enough in terms of weathering the storm, then you will not end up losing too much. And like Mr. Warren Buffett has said, that if you don't lose too much, right? If you don't lose, you end up basically at some point of time giving yourself a chance of making good money and ultimately creating wealth. The next slide, please. Yeah. So, like I said, you cannot invest after clarity, because when the event happens, the stock prices factor it well. So, you have to be preemptive. You have to decide beforehand which decision or which risk you are willing to take. And if it plays out, you are the winner. And that's the tough job of fund managers. And that's where probably most fund managers end up not having enough sleep, because obviously it's always difficult when you have a 30 stock, 20 stock portfolio. Something or the other will go in your mind in terms of what happens with a particular stock on a particular day. So it's a tough job. Allow them to do their job while you can enjoy whatever you're doing, in terms of either you're being a doctor or you're being a professional, whatever you are. Keep yourself at peace by investing in the fund through the SIP route or lump sum, depending on your asset allocation. Next slide, please. Yeah, next. Yeah, so I think enough has been spoken about SIPs and the importance of SIP, and I do believe, and we do believe, that systematic investment plan is one of the most important aspects for all of you to have in your portfolio. And have a SIP for 10 to 15 years, 20 years, 30 years Don't think of SIP as a 3-year, 4-year, 5-year product. It will not be productive enough. And most important, don't stop your SIP when markets go through
True.
a downturn, because like ma'am had mentioned, when the markets go down, you get the benefit of rupee cost averaging. What is rupee cost averaging? Every time that the markets go down, your units or the uh, portfolio becomes cheaper. So you're able to buy lower and cheaper. And because you bought lower and cheaper, your overall cost of acquisition comes down, which when eventually the markets go up, and I think I heard Kurs mention that in the long run, you take the 100-year history, the markets keep going up as the GDP keeps going up and the monetary expansion keeps happening. So if you want the advantage of markets when they've gone up, you have to buy when the markets are down. That's the beauty of this. Thank you. Over to
Sips.
you, Kumar.
Yes.
Thank you so much, Chintan. I am pretty convinced about investing in this fund for sure. So, one question, that I've been sort of really digging deep these days is, you mentioned corporate restructuring or promoters or management changes, right? A lot of other factors that you mentioned have some data that's publicly available. I can understand why the macroeconomic condition is changing. What is your approach to analyzing or studying the CEO of the company, the promoters, the management? Because, for example, Warren Buffett goes and meets them. He meets the competitors. As a retail investor, I can't do that. I can't do those things. How do I understand? Because that's not in their open. मतलब shareholder meeting में वो अच्छा ही बोलेंगे, annual report में, calls में. So, what is your approach there when you say you take advantage of such special situations? And because humans are the ones that make the company, right? They are the ones running the company. So yeah, over to you.
Yeah, so I think, like you mentioned, management or the CEOs or the employees is what makes any organization, be it a technology organization or be it a two-wheeler company. We've seen a fantastic turnaround in one of the two-wheeler companies, which had one of the strongest brands in terms of a motorbike, and that turnaround happened because the younger generation, when he took over, he brought in the changes which were required because he knew the pulse of the youth, why they wanted a particular sports bike and the way it is, and the rest is history. So it definitely makes a difference who the promoter is, and that's where, like you mentioned, of course, at a mutual fund level, because we are managing public money and that's our job. We have the entire structure wherein from the CIO to the fund management team and the analyst team. So each analyst covers one or two sectors. Then you have fund managers who will cover the or who will probably run the funds in conjunction with the analyst inputs and also their own past experience. And there is a CIO who will obviously oversee. And typically, a CIO has 15, 20, 30 years of experience of seeing the market, seeing the cycles, and seeing the promoters. So, if there is a history of the company, if there is a history of the promoter, it makes life that much easier. And that's where, as a mutual fund, we obviously go and meet the company. Uh, like you said, just meeting the company will not give you 100% true picture of what's happening in the industry. You need to meet competitors. You not only meet competitors, you meet suppliers, you meet consumers or customers of that particular corporate. You also meet experts who understand that industry very well, right? So I think it's and most important, what's happening globally in that particular sector. That also matters in certain sectors, right? So I think that's what we do day in and day out in terms of the 450 odd companies that probably we research. It's a constant interaction with the promoters. In fact, now from a regulatory standpoint, also many of the companies do have quarterly reports or quarterly con calls, which are then published, and the um, transcripts of those are available online for investors to look at. So you do get a sense or much deeper sense of what the company is thinking, what is happening, because whatever questions are being asked by professionals like fund managers or broking analysts to the company are available. The questions are available and the answers are available. So if any investor who is listening right now does really want to know more about the company, you can go online. The transcripts are available on the NSE or BSE exchange for that particular company, and you can go in depth. But of course, if you don't have the time to do all of that, simply invest in a mutual fund. The fund managers do that for a living, and it's their job to do the right approach. And they will not obviously go for the highest return that they can see. They will go for risk adjusted returns, and that is an important concept. You just don't bet on a horse because the horse is going to run the fastest. No, Is it going to be able to manage if the terrain becomes difficult? Is it strong enough to go through the distance if the terrain becomes difficult, or if the environment changes? And that's where experience of the analyst or the fund manager matters a lot. A stable process which a mutual fund follows matters a lot. And I think if you look at most of the mutual funds in India, they've been able to bring that to the investors, and ultimately then you end up benefiting from a diversification benefit from a professional fund management which a mutual fund brings.
Got it. I think completely makes sense. And one thing that you mentioned, I also agree that the information that you get by talking to competitors is very, very important. And obviously, all other stakeholders, like you mentioned. And I personally have started listening to a lot of calls. There's transcripts and there's like audio version also available these days. So those are the most insightful because you hear the promoters talking, and that's how you kind of connect with them and establish that trust. Okay, so my second question is, so I personally have been investing in these two stocks, and I saw this was in the like some of the major holdings in this mutual fund. One is ICICI Bank, and the second is Bharti Airtel, right? So I also sort of increased my weightage when there was some special sort of events which caused the stocks to fall. For example, the crisis when COVID started, then Airtel mein to, like, telecom industry is like sort of bombarded with regulation that keeps changing. So as a fund, how do you can you take us through the journey of one such event in one of these stocks? I would love to hear that, like some event that happened and that kind of triggered you to increase your weightage in these stocks or add them to the fund.
Sure. So at a sectoral level, if I have to discuss, let's look at telecom and banking both, right? And currently we do have a positive view on banking and telecom both. So that will probably tailspin into your question itself as to why we
Hmm.
have a particular exposure in this particular fund. Let's look at
Hmm.
banking in India. From 2008 to 2013, there was this expansionary mode wherein a lot of investments happened in India into infrastructure and allied activities, which, because of the demand destruction that happened subsequently, were not able to
Hmm.
service their debt, and banking industry had to take a big hit. So between 2014-15 and 2020, all that the banking industry in India did was kept on writing off the loans which basically they had given prior to 2013. So whatever profits they made in 15, 16, 17, 18, 19, 20, a large part of it for the corporate banks went into writing off the non-performing assets, which is
Hmm.
essentially the loans which they had given, which became bad. They had to write it off or set it off versus the profits that they had. So I'm a bank. I make profit in 2017 in my normal book, but my past loans became bad, so I had to set it off with the profits, and hence the profitability of the banks took a hit. It was also a time between 2015, 16, and 2020 where inflation was low, growth was less than 5% in India, and hence there was no loans that any corporate was ready to take. We were in a consolidation phase. In fact, we are at a 4-decade low in terms of loan growth, and that also essentially meant that the avenues for banks to make money came down significantly. Now we are in 2022. Inflation is back. India, I think, ma'am mentioned that India is one of the fastest growing economies, and we are looking at some capacity utilization improvement. So the banking sector is looking at turning. So the
Hmm.
write-offs are over. All the NPA
Hmm.
problems are probably behind. They are well provided for, and the banking system is light, and it is looking at growth. It is looking at
Hmm.
loan growth coming back because of capacity utilization improving. Be it personal
Hmm.
loans, be it housing loans, we are very competitive. And because the public sector banking has got consolidated and private sector bank is growing faster, they are not only getting the benefit of India growing, they're also getting the benefit of market share gains from the public sector, and hence you end up getting
Hmm.
a double whammy from a private sector perspective. So that's why private sector banks are in a special situation, and they're coming out of that special situation, which makes them a good buy. If you look at
Hmm.
telecom, and I did mention it in detail earlier, so I'll just probably make it short.
Just
Uh,
one thing,
yeah, sure.
sorry, I'm interrupting you.
Sure, no
So,
problem.
so now we have a opinion that why India's banking sector is at a cusp of growth, because the bad days are kind of over and we are looking at a like a good future. And you said that public sector banks are getting consolidated. Now in private sector banks also we have a lot of options, right? Now how do you go about choosing, let's say ICICI and Axis, I think is part of the portfolio. How do we come to these two stocks as well, like in the private sector banks? What was the
So,
view
so,
there?
so, so if you look at it, you can divide banks into those which have had corporate sector loans or those which have had focus into retail lending, right?
Hmm.
And if you look at the Indian entire landscape, the two largest corporate
Hmm.
banks, apart from the public sector bank, have been the banks which are part of this portfolio. So that's how you basically choose, wherein you have a view that the corporate sector lending is going to turn and the worst is behind you, and you basically create or add to that particular bank given the valuation differential also. So what you look at is what is your core view that corporate lending or corporate banks have come out of a rough. In fact,
Hmm.
retail lending in the last 5 6 years has done exceedingly well. So the retail banks
Hmm.
have basically got re-rated while the corporate banks have got de-rated. So within the private sector banks, which are the corporate banks, and then what is the relative valuation among them? That basically makes us choose the right set of stocks within the banking system.
Got it. Thank you. Please go ahead with the
And and,
telcos.
and, and and just yeah, thanks for the question. And if you look at the telecom sector, clearly from 40 players, we come down to 3 or 4 players, including the government telecom player. And with prices being so low, all of us know that for data and for telecom, we are the cheapest on a per gigawatt, sorry, per whatever per GB basis. We are one of the cheapest in the world, and
Hmm.
I think from a data consumption perspective, India is exploding because of every household, even in the rural areas, having a mobile phone which is equipped with 4G. And I think the advent of the
Hmm.
new player with low cost and penetration has helped the industry grow. So now we have lesser number of players, we have a
Yeah.
wider market, and we are seeing prices go up for the telecom sector. So the
Hmm.
profitability, the cash flows will improve significantly. And till now, whatever money or cash flow which the telecom companies were getting, they were paying for the spectrum charges that they have basically committed to the government and paid. Once those spectrum payments are behind them, the cash flow which will get generated will be, they have to keep probably doing capex, but it will be cash flow available for them to repay their debt. And then uh, whatever money gets generated is significant because the cash flows and the EBITDA margins of these companies are significantly large. That's where the telecom story in India is just about to unfold, and we do believe that the rates in telecom in India will go up, which will benefit
Hmm.
the telecom sector. And all of us have seen in COVID and even currently while we speak that life without data is almost like life without air, and I don't think we are going to be successful. So might as
Correct.
well have that as part of your core portfolio, because in the long run we can survive without most things, but food, water, shelter, and data, it's impossible to survive. Thank you.
I think I read one article or one statement by Damodran that all the tech companies like Paytm and Zomato should give third of their valuation to Jio and Airtel, because I mean that's how they are surviving, because without data none of these companies would be there or grow. But that's the backbone, right? I mean, this Zoom
Yeah.
call or this won't be happening if it wasn't for them. Yeah. So my second, like third question, which is slightly unrelated, is that a lot of gyan or a lot of knowledge that we get from famous investors, let's say Peter Lynch or Warren Buffett, is very good to read and hear. For example, Warren Buffett recently, I think, spent $56 billion buying stocks, various companies, and he didn't invest or buy a lot of stuff in 2021. Basically, I mean, his core ideology that be fearful when others are greedy and greedy when others are fearful. But I've seen in real life, like even around my friends, my family, जब market गिरता है सब बेचते ही हैं. मतलब it's very difficult to adapt that thing in real life, right? How, I mean, how do you answer that question? It's very good to hear rupee cost averaging, all this, but in real life, practical sense, I've seen a lot of people do the exact opposite of what they're consuming or what they're reading.
So that's where I think only 1% or less than 1% of the people actually end up making money in the markets, while the rest 99% either lose or just about barely manage to keep their wealth in the market. The reason is very simple, and having had 17 years of experience in the market itself and looking at the market daily, I myself still sometimes, and when COVID struck, obviously, it kind of shook me as well, and it was difficult to make up my mind. But I think at ICICI Prudential, we've been able to, codify via models as to what we should be doing under market circumstances based on objective data and models, and that has helped us go through many a crisis in the last 10, 12 years without having to wrong foot ourselves. And I think that's where being objective via a pre-mortem based discussion or pre-mortem based decision making through strong models helps. So while I do not expect a retail investor or anyone to have sophisticated models, but you can have a definite thought process wherein whenever there is panic, whenever there is blood on the street, as they call it, whenever there is a significant downturn in the market, instead of panicking, instead of getting worried, probably you can look at that, is that panic because of a reason which will probably pass away, and more often than not, most difficult times do pass away. And at that point of time, I think Kuwar had mentioned, you keep some emergency funding, you keep some funding for yourself, or keep some money aside that you can invest in dire markets, or you invest in markets when they have fallen sharply. You'll end up probably taking advantage of falling markets rather than getting worried. Greed and fear is such a strong imbibed in our brain that whenever there is anything that goes wrong, we suddenly freeze. And I think finance or money uh, it somehow makes us, even more scared. And even though logically you should not be so worried if there is a market fall, but because the thought of losing money triggers those thoughts, right? That if the markets fall more, I'll lose more money. I will be left with less money for my child's education, for my child's marriage, for my vacation, or for my home. That it then brings you down in terms of your thought process spiral, and that is what probably causes you to make the wrong decision of taking out money before it falls more. Instead,
Correct.
always be prepared for market falls by realizing that, okay, markets are high, I need to take out some money from the markets and keep them aside, and when markets are low, I'll put them in. If you don't want to do that, then I would just suggest that you invest your money in the balance advantage fund category and be happy with it, because in the long run the fund will do that for you. And some allocation, like I said, you invest in the special situations category, you'll be fine, because there is only one Warren Buffett. There are only few fund managers or few people who are able to manage their emotions, and that's where there are very few people who actually end up being extremely rich in the markets. It is simple. You can read books, which are there, and there are plenty of good books, right? Which you can read from a market standpoint on behavioral markets, right? So the little bit of behavioral investing comes to my mind while we are speaking here. It is a book which you can possibly read. It's a quite nice small book, but it will allow you to basically make the right decision and help you prepare for any market downturns. Thank you.
Lovely answer. I think, I personally feel, I have genuinely from the day COVID started, जो तब एकदम से सब आ गए थे market में, I've made a habit of looking at my portfolio lesser, because वो अपने आप panic या वो create करता है. You have to sort of build that habit of checking your stocks, let's say once a week, or probably less than what we do right now. That's one thing, that I tell a lot of people who are actively sending me screenshots, अब क्या करें. I just tell them, देखना छोड़ दो अब अभी के लिए, it's fine, it'll be fine. Yeah, I think Shivani
जब
is
जब जब पैसा लगाते हो या व्हेन यू इन्वेस्ट, तब अगर आपने अच्छे से सोचा है और आपने अच्छे से समझ के पैसा आपने निवेश किया है, तो आपको ये चीज का ये चीज नहीं सोचनी पड़ेगी, या ये चीज पूछनी नहीं पड़ेगी कुंवर जी को कि अब क्या करें. अगर आपने सोच समझ के पैसा लगाया, तो अब क्या करें का क्वेश्चन ही नहीं आएगा. इनफैक्ट आप
correct,
प्रिपेयर्ड हो गए कोई भी मार्केट सिनेरियो के लिए. शुक्रिया.
correct. Yes. I think Shivani, you're on mute if you're speaking something.
Yeah, yeah, this was something really very powerful, you just spoke about. Because when I teach in class, many a times, this comes for passive investment strategies. So if you are a passive investor, especially, if you're into mutual funds, there's a very powerful statement. It is like, I don't know and I don't care. So wherever the market go, it's fair enough because I'm a long-term investor. I have selected my fund, my stock correctly. So why should I bother? Why should I keep looking at the market again and again and scare myself further? So, and if you should need also some courage to start investing more into the market. So that was really really wonderful insights that you have given us, Chintan. We have a couple of questions here. Could we take that one or two questions?
Yes, please. That's the most
There is
interesting part of the conversation always.
yeah, because there is this is not a question actually. This is, yeah, I think Havra Khambati has a question, which is, is a thematic fund really a good option? Yes, this one. Considering they get punished the most during bearish periods, so this is definitely one which you could answer.
Yeah, yeah, sure. I think there are some fantastic questions which I can see in the lineup. So I'm very glad, and please keep those questions coming. Uh, So the question which is on thematic funds, just for the benefit of everyone, a thematic fund is defined as a fund which is on a specific theme. It could be housing, it could be technology, it could be infrastructure, and then there are sector funds which we can club also, like pharmaceutical, healthcare, and diagnostics. So auto is also a theme, or transport is also a theme which comes to mind. So banking, of course, is already spoken about, banking and financial services. So each of these themes has different cycles, and like has been mentioned, that themes can be punished a lot. Yes. So let's go back into time and see. 2010 to 2015, pharmaceutical did exceedingly well. 2015 to 19, it did exceedingly badly. Then again, 2020, 21, it did well. Autos from 2013 to 17 did exceedingly well. 2017 to now, almost, it is a painful 5 year period for autos, and for obvious reasons. If you look at any auto company for 5 years, they've virtually not grown. Banking from 2008 9 to 2015 16 17, great run. Last 3 4 years, it's got hurt. Information technology, February 2018 till date, one of the best performing sectors, and now most people are looking at investing in it. So why am I giving this history is that most people get the thematic investing wrong because they
Yes.
invest in it when it has actually done well, and very few will have the ability to invest when a sector has gone through pain. My mind goes back to the ICICI Prudential Commodities Fund, which we launched, I think, about 2 years or so back. It did not receive too much in the NFO because commodities by itself was a bad word, because 10 years there was no return. And in the last 2 years, the fund has returned reasonably good amount of money, in the sense that because commodity prices have gone up, it has done very well. And very many people come and ask us that, should we invest in commodities fund now? I say that if a theme has worked very well in the past, it is not necessary it will do well in the future. Look at the valuations, look at the theme, and look at the theme which probably has done badly. And that's where banking as a sector, auto as a sector, and potentially do well over the next 2 3 years, while technology, which has done very well over the last 3 years because US economy has done well, and it's almost, as in, I think the technology index has returned more than 30% CAGR over the last 3 years. It can take a breather, it can take a consolidated. So the question is very simple. Are sectoral or thematic funds risky, and are they worth it? The answer is they are worth it if you know how to invest in it. And because you may not know how to invest in it, we at ICICI Prudential have a solution for all of you, which is the ICICI Prudential Thematic Advantage Fund of Fund, which effectively is a fund of fund which keeps moving between the various themes which are there, without you having to worry, because how many themes are you going to be able to track? And so if there is an investor who wants to take the risk of investing in themes, allow us to pick and choose the right theme for you and get out and get in at the right time in the right proportion, so that you don't have to worry about getting stuck in a wrong theme. And hopefully we do a good job out of it. Thank you.
Okay. I think there is one more. It's a very simple question. What is step up SIP in mutual funds?
So,
It's very simple.
yeah, very, very, very simple question. It's called step up or top up, whatever you call it. Essentially, we, in general, in India, have seen that our salaries, our profits, or generally businesses, of course, have their ups and downs. But in general, if you're a salaried employee, you typically see a anywhere between 5 to 15% increase in your salary every year, and you end up obviously saving slightly more, right? And if you're saving slightly more every year, you need to invest slightly more. And in general, your ability to invest more increases as your incomes increase and your disposable incomes increase as well. So to allow you to participate or invest via systematic investment plan, suppose you are investing 1,000 rupees or 10,000 rupees a month this year.
Uh-huh.
Next year, you can make it 10,500 if you increase your SIP amount by 5%. That's the step up SIP that is there. It will automatically make you save more, invest more, and ultimately, as was mentioned by Kuwar, in 10 years, 15 years, 20 years, if you saved more and if you invested more, your wealth will be much higher. And empirical evidence in the past has shown that if you stay longer and have the step up SIPs, you end up obviously generating a lot more wealth than what you would with a flat SIP, because obviously you are investing less, saving less, and you're making less money. Thank you.
Great. There's one very different question which has come up here, and that says, what is your opinion on crypto mutual funds?
So it's an area which does not have regulation in India. Mutual funds aren't allowed to launch because there is no regulation. And so while there is no regulation and there is no clear mandate, one, obviously I will have nothing to say on it. Two is, if you don't understand something, don't invest in it in general. So if you're able to understand, it's your choice. But if you don't understand and if there's no regulation around it in India as such, except for the taxation regulation, I'd best say that be careful into something which has done exceedingly well in the last 10 years and probably does not have a tangible existence which we can be sure of. I am not an expert. I don't understand blockchain as a technology. Being a simple chartered accountant, technology does not naturally come to me. But I would say that just be careful whenever you invest. It is not about any specific asset class, but any asset class which you do not understand, just be careful about it. And especially, like I was mentioning, if a theme has done exceedingly well in the past and you invest in it, you run the risk of burning your fingers or hands. The same thing can happen in any asset class which you don't understand. And human beings are capable of making significant errors of judgment when it comes to valuing random events. And so anyone who wants to know more can Google the tulip mania of 1700s. You will realize what human beings as a herd are capable of. Thank you.
True, true.
I
Well
think
said, well said. Absolutely nice. I think that brings us to the end of the questions. There's this one, I think, take on international funds. If you would like to answer that, Kuwar, take on international funds and how much of your portfolio in it is in it.
in international funds. Oh,
Haan
great.
ji.
So, I mean, one reason why I invest in international funds or fund of funds and stocks is because till now, still most of the innovation is happening outside of India. I mean, India is catching up when it comes to the innovation metric, but a lot of the top 40, 50 innovative companies that we see in the world are international companies. So that is my major reason why I, let's say, have some exposure in international stocks and funds, and it's around 10% of my portfolio is outside India, majorly in the US for that same reason. And
That gives you international diversification, basically. One
for
way of
sure,
diversifying your portfolio.
and yes, I mean, it was very difficult till some time back to invest outside India, but luckily recently we've seen a lot of funds, a fund of funds coming in. We've seen a lot of companies coming in that allow you to invest outside India as well. So the process also makes it easier. But I feel still it's much more difficult to be in touch or study companies or stocks outside India because you're sort of not exposed to that knowledge that you grab every day. So that's why I won't recommend going a lot of like exposing yourself a lot to international funds or stocks, but still it's important to also be exposed there because it teaches you a lot as well. Because if I invest in something, I tend to read a lot about it and study a lot about it. So that's my take on that.
So just 30 seconds to 1 minute, if I can answer that. India is about
Yes.
3% of the global GDP. India is 3% of the global GDP. India is one of the fastest growing market. And our market cap is 3% of global market cap. There are many large companies globally, MNCs, which are not available in India for investments and That's where probably many investors have got, wanting to get exposure there, and they've taken exposure there. Just a word of caution that if you see the current turn of events, the US markets is at a late cycle. The interest rates there are going up, and the last 10 years, if you consider US as a theme, right? If you consider the US market as a theme, the last 10 years from 2012 to 2022, US markets have actually done well on the back of lower interest rates. So while diversification is something which is good, just be go slow on it if you're just a starter. Things are probably not going to be that easy in the international markets, be it in US or Europe. Asia has already seen a correction, so Asia may be even better than US. But slow and steady wins the race. If you don't understand it, it's okay to miss it. Good to learn first and start slow, and I think take baby steps, because the international world is not an easy place right now, given the
Absolutely.
inflationary pressures that we are in. One last question, as I see it, and if I can answer that, ma'am, it is
Yeah, yeah,
recommended to
sure.
buy at lows. Then why selling at highs isn't a recommendation by investors? Uh,
Huh.
Honestly, investing is for the long run, is what everyone says, and hence, and everyone gives you an advice to buy at lows. Selling at highs is not an advice as such, because who knows what a high is, right? It's very difficult to say a high. It depends on your time horizon. Today, what is a high after 5 years may not be a high. But yes, if the valuations become expensive, which is what a high is, then definitely you should look at reducing your exposure. And that's where I think most advisors would probably come and tell you, have a larger chunk, almost 40 to 50% of your portfolio can be in asset allocation schemes, be it the ICICI Prudential Balance Advantage Fund or the ICICI Prudential Asset Allocator Fund, or any of the asset allocation schemes available, which you are comfortable with, because they will automatically take care of investing and divesting without you having to worry about taxation, without you having to worry about what to buy, when to buy, how much, what is cheap, what is expensive. Give yourself a break. Do not think so much. Allocate. Have a right advisor who can give you all this advice, and I think life can be more peaceful, and you can enjoy the fruits of all the labor that you do and all the happy times that you can spend with your family. Thank you.
True, true. Yes, very well said, Chintan. I think we can, say thank you very much for the valuable insights both of you have, given our viewers today. And I'm sure the viewers must have definitely learned a lot from you, mainly about thematic funds. The misconception or whatever they had myths about it might be cleared today. So thank you very much, both of you. Thank you for joining the talk show, and see you again next time.